Microsoft is trading around $405 right now. But here's what's wild. Just 8 months ago, this stock was at $555. That's a 26% drop. And Wall Street's average price target is $560. So, are we looking at a massive opportunity or a falling knife? In the next 4 minutes, I'll break down the fundamentals, the best entry zones, and 2 strategies I'm personally running on MSFT right now. Let's start with why Microsoft is still one of the most powerful businesses on the planet. Q3 FY 2026 revenue came in at $82.9 billion, up 18% year over year, beating Wall Street estimates by $1.4 billion. EPS was $4.27, beating estimates of $4.06 by 5%. Operating income was $38.4 billion, with a 46% operating margin. This company prints money. Now the real story. Azure. Cloud revenue grew 40% year over year. That beat analyst estimates of 36%. And Microsoft's AI business? Annual revenue run rate just hit $37 billion, growing 123% year over year. They have over 20 million paid Microsoft 365 Copilot seats. AI is not a future bet for Microsoft. It is already a $37 billion business, growing at 123%. Next earnings? July 28, 2026. That is your next major catalyst, market. Now let's talk about what Wall Street thinks. 62 analysts cover this stock. The consensus is strong buy. The average 12-month price target is $560, with a high of $870 and a conservative floor of $400. TD Cowen, Cantor Fitzgerald, and Citizens all reaffirmed buy ratings as recently as June 4, 2026, with a combined average target of $531, implying 25% upside from here. Bear case. $400, barely below today's price. Base case, $560, 36% upside. Bull case, $680 to $870. If AI spending accelerates and Azure sustains 40% growth. So the downside is limited and the upside is significant. Now, when do I buy? MSFT's 52-week range is $356 to $555. We're at $412, sitting near the lower third of that range after a 26% pullback from the highs. Zone 1, $400 to $420. We're here right now. This is a strong buy zone. The stock has bounced from $400 twice in recent months, making it a proven support level. Zone 2, $370 to $390. A deeper dip entry. Strong historical support. If macro conditions worsen or earnings disappoint, this is where I'd buy aggressively. Zone 3, $356 and below. The 52-week low. A gift if it happens. Back up the truck. My approach. Scale in. Don't try to catch the exact bottom. Buy a portion now, add more at $385, and hold dry powder for a deeper drop. Strategy 1. My MSFT Leaps position. I'm actually running this trade right now. I hold 2 Leaps contracts at the $450 strike, expiring January 2028. If MSFT hits the analyst consensus of $560 by mid-2027, those contracts could be worth $12,000 to $15,000, a 70 to 115% return versus a 36% return on the stock itself. The risk? If MSFT stays below $450 by January 2028, the contracts lose significant value. I'm comfortable with that risk because the fundamentals are strong and the timeline is generous. Strategy 2. The covered call for income. If you own or buy 100 shares at $412, here's the setup. Sell one covered call at the $440 strike, 30 to 45 days out. Collect $300 to $450 in premium. If MSFT stays below $440, keep the premium and repeat. If it rises above $440, shares get called away. You still made $28 per share in gains plus the premium. Run this monthly, and you're generating 8 to 12% annualized income on top of any stock appreciation. So here's my final take on MSFT. This is a rare moment. A world-class business, $37 billion AI revenue growing at 123%, Azure at 40% growth, 62 analysts on strong buy, sitting 26% below its all-time high with a next earnings catalyst on July 28th. Best entry now, $400 to $420. Dream entry, $370 or below. Strategy 1. Leaps for leveraged upside. Strategy 2. Covered calls for monthly income. Hit subscribe if you want to follow my real MSFT trade live. I update every week with real numbers. Drop a comment. Are you buying MSFT at these levels or waiting for a bigger dip? See you in the next one.